Hello guys, hope you'll be fine. First of all, like and subscribe my channel, press the bell icon for new videos. So today topic is S Corp with LLC, how to choose the best structure for your business. LLC and S Corp are two of the most common business entities in the US. However, small business owners are often unsure whether an LLC or S Corp is the best fit, especially regarding tax advantages, legal protection, and administrative requirement. With so many entrepreneurs opting for one of these two structures, it's important to understand the difference between LLC and S Corp in order to choose the best option for your business. Here's the detailed explanation of the key difference between LLC and S Corp, including what you need to know to decide which structure is right for your business. What in the article, what is an LLC, what is an S Corp, what is the difference between S Corp and an LLC? Can LLC be an S Corp? Can S Corp on an LLC? When do LLC with Corps make the most sense? And how to choose between an LLC and the S Corp? How Strap can help. So, guys, the first question is what is an LLC? An LLC are limited liability company, the type of business entity that combines the limited liability protection of a corporation with the flexibility and tax benefit of a partnership. Forming an LLC establish a business as a separate legal entity from its owner, who are called members, meaning they are not personally responsible for the debts and obligations of the business. LLC member pay self-employment taxes on their earning. Alternatively, an LLC can elect to be taxed as a corporation, which may offer different tax advantages depending on the business structure. What is an S Corp? An S Corp corporation is a business structure that is usually more appropriate for small and medium-sized business that want to avoid the double taxation that can occur with a traditional corporation. In an S Corp, the company income deduction and credit pass through to the shareholder personal tax return, and the company itself does not pay federal income tax. This means that the shareholder of the S Corp are only taxed once on their share of profits at their personal income tax rate, rather than twice as company as a shareholder. To be eligible for S Corp status, our business must meet specific IRS requirements, such as having no more than 100 shareholders, being organized as a domestic corporation, allowing only US citizens or residents aligned as a shareholder, issuing one class of stock, meeting all S Corp election filing requirements with the IRS. S Corps are a popular choice for business that want the liability protection for a corporation but prefer to be taxed like a partnership or solo proprietorship and the proprietors. However, S Corp require more administrative work such as filing annual report and meeting payroll tax obligation for the owner employee. What is the difference between S Corp and an LLC? The choice of whether to organize an S corporation or an LLC depends on the specific need and goals of the business owner. While both S corporation and LLC provide limited liability protection to their owner, their tax treatment, ownership structure, and management requirements differ significantly. Here's an overview of the key differences between these two points. Taxation. By default, LLC are pass-through entity, meaning profit and losses pass through to the owner personal tax return. However, LLC can elect to be taxed as a corporation, C Corp or S Corp if desired. S Corps are always pass-through entity, meaning they avoid double taxation at the corporate level. However, S Corp can provide tax saving on self-employment taxes by allowing owner employees to take part of their income as distribution, which are not subject to payroll taxes. Ownership. S corporation restricts shareholder to US citizenship are resident, and there can be no more than 100 total shareholder. LLC have no such restriction. Additionally, S corporation can issue only one class of stock, while LLC can have multiple classes of ownership interest management. LLC offer more flexibility around management structure since they can be managed either by the owner, member managed, or by designated manager managed. As corporation are required to have a board of and the board of direction designed officer and hold regular board and shareholder meeting formalities. As corporate generally have more formality and reporting requirement compared to LLCs, such as needing to hold regular meeting and maintain corporate record. However, some states require LLC to submit annual report and fee. Can an LLC be a S corp? Yes, an LLC can elect to be taxed as a S corp. This allows the business to benefit from the pass-through taxation that S corp enjoy while maintaining the flexibility and limited liability protection of an LLC. To qualify for S corp taxation, the LLC must meet certain requirements, including having no more than 100 shareholders, all of whom are US citizens or resident, having only one class of stock, and meeting certain restrictions. On the types of shareholder and type of stock that can be issued, although an LLC can elect to be taxed and as Corp, it's still classified as an LLC under state law and must comply with all the requirement and regulation governing LLC and the state additional regulation and the requirement of S Corp, such as filing annual report with state and federal agency, maintaining accurate business record, following payroll tax rule for owner employees, and adhering to shareholder and stock loss restriction. It can get complicated, which is why it's important to work with a tax lawyer and accountant to be sure your business complies with IRS regulation. Can state requirement? Can an S corp own an LLC? Yes, an S corp can own shares in other corporations or own interest in other types of business, including the LLC. If an S corp owns an LLC, the LLC is considered to be a separate legal entity, and the S corp ownership interest in the LLC is treated as a business asset of the S corp. The S corp will report its ownership interest in the LLC on its tax return, and any income or losses generated by the LLC will flow through to the S corp and to be reported on the X corp tax return. In this scenario, the S corp would be considered the parent company or holding company of the LLC, and the LLC would be the subsidiary or wholly owned subsidiary of the S corp. The S corp would have the power to make decision and take action on behalf of the LLC, as well as responsibility for any liabilities and debts incurred by the LLC. This structure can provide tax benefit and liability protection while also keeping business entity legally existing. When do LLC with S corp make the most sense? Both LLC and S corporation offer advantages and drawbacks depending on specific business need. Here are some situations when you might choose one over the other for your business. If you care about flexibility in ownership, management structure, and tax status, you might prefer an LLC. LLC can be owned by one or more people, can be managed by the owner to or by designated manager, and can be taxed either as a pass-through entity or a corporation, minimizing reporting requirements. You might prefer an LLC. LLC generally have fewer formalities and reporting requirements than S corp, which can make them easier and less expensive to manage. Self-employment taxes. You might prefer an S corp. LLC owners must pay self-employment taxes on all profit, which can be higher than the taxes paid by S corp shareholder. S corp owners can avoid some self-employment taxes by paying themselves a salary and assessing additional profit as distribution, which are not subject to self-employment taxes. Extending the lifespan of your business. You might prefer an S corp. In some states, LLC have a limited lifespan and may need to be dissolved after a certain period of time or after a specific event, such as the death of an owner. Access to capital. You might prefer an S corp compared to S corp. LLC may have limited option for raising capital, such as through stock offering or taking an investor. S corp have restriction on who can be a shareholder and how many shareholders the corporation can have, which can make this structure attractive to smaller business that want to limit the number and two of the owner. How to choose between an LLC and an S corp? It's important to do your research and due diligence before committing to a business structure. Consider the option for ownership structure, management, taxation, and liability protection. Think holistically about your business and long-term business objective. Which aspect of each structure feel the most important to you as an owner? Here's a simple step to help you decide between LLC and S corporation. Evaluate your business need. Consider the types of business you run, the number of owners of shareholders you have, the industry you operate in, and your long-term goal for the business. Understand the tax implication. Compare the tax advantages and disadvantages of each structure. These include pass-through taxation for LLC and the S corporation, self-employment taxes for LLC, drawbacks with either option. So the specific of your business will delegate and dictate which is right for you. Consider liability protection. Both LLC and S corp offer limited liability protection and for owner, but LLC may provide more flexibility and in terms of personal self protection, especially if the business has multiple owners. Compare management structure. Think about the level of management control and flexibility you need, including whether you want to be an actively involved in running the business, to prefer to have and to hire a designated manager. Understand the compliance requirement. Both LLC and S corp have specific requirements that must be met, including rules about filling paperwork, holding regular meetings, and maintaining accurate record. Consider the time and resources needed to compile and comply with the regulation. Seek professional advice before making a decision. Consult with a qualified attorney or accountant who can help you understand the legal and tax implication of each structure, and they can help you make an informed decision. How Stripe can help. Stripe at least make it simple to form an LLC or S Corp and set up your company so you are ready to charge customer, hire your team, and fundraise as quickly as possible. Apply to athlete. And now, guys, we talk about LLC with corporation. What's right for you? What is corporation? A corporation is a business entity that is owned by shareholder but which is entirely separate from its owner as a legal entity. And corporation when as borrow money. A corporation may be a good choice for business looking to scale through online selling platform. S Corp and C Corp are different types of corporation. There are also corporate tax designer and designation. A corporation is by default classified as a C Corp for tax purpose. LLC with corporation. The key difference: LLC and corporation have some basic similarities. They are both legal entities that afford their owners liability protection, for example, but they have far from differences, especially in how they are taxed and what options they have for fundraising by selling ownership in the country. Formation. The formation process is more complex and expensive with a corporation, including having to elect a board of directors. Corporation filed an article of incorporation with the Secretary of State of Formation, then hold a meeting to create corporate bylaws. Once formed, a corporation must hold annual shareholder meeting and record the minutes of those meetings for tax and legal records. An LLC file article of organization which requires less information. The internal management is typically outlined in the LLC operating agreement, which can be customized to the specific needs and desire of the owner. Management structure. LLC offer a more flexible management structure, allowing the owner to manage the company directly or appointed manager to run the business. There are generally no strict requirement for board meeting. Annual reports are recorded under an LLC. Corporation have a more rigorous and formalized management structure with distinct roles for shareholder, director, and officer. Corporation must have a board of directors elected by shareholder responsible for overseeing the major decision of the company. The board of directors appoints officers such as the CEO and CFO to manage the day-to-day operation of the corporation. Outside investment. Corporation offer more opportunity for raising capital, especially when building an online store. It can raise capital from investor by offering company shares, but LLC cannot. Rather, they have members owner who are allocated the percentage of the company according to the LLC operating agreement. And corporation can be privately owned or be public company listed at stock exchange, in which case the company is regulated by the US Security and Exchange Commission. An LLC cannot offer share. Investor would need to be added to the LLC article and of organization as member owners in order to receive equity for their investment. In the same vein, a corporation can go public while an LLC cannot. Taxation. LLC members are considered self-employed by the IRS, so they do not have to pay self-employed taxes. LLC can opt to be taxes as an S corporation to lower some of the tax liability for the owner who would be unemployed to receive a veto from the company. Payroll taxes apply to the salary, but profit distribution are not subject to self-employment tax. Although it can be taxed as an S corp, and LLC is not considered a corporation. Corporations are taxed by default as the S corporation, which are subject to a corporate tax on profit. Corporation with fewer than 100 shareholder and may elect to be taxed as an S corp rather than a C corp. C corp and S corp enjoy pass-through taxation. LLC may also elect to be taxed as a S corp or as a solo and the proprietorship or partnership, depending on the number of members it has. As a separate legal entity, corporations are responsible for paying taxes on the corporate level. The federal corporate income tax rate is currently 21%. LLC do not pay this tax, rather the company profit get passed the owner and they pay personal income tax. Formality. LLC are more relaxed when it comes to paperwork and meetings. You don't need regular board meeting or detailed minutes like corporation, and you mainly follow what's in your operating agreement. LLC still need basic record like financial statement and tax form, but there's much less red tape. Corporation have more strict rules. They must hold regular board meeting, keep detailed record of decision, and follow specific voting procedure, and they also need a board of direction and corporate officer like a CEO and secretary. These requirements help protect shareholder, but they do create more administrative work. To ensure compliance, check your state specific business Listening requirement, profit distribution. LLC have flexible profit sharing. Member can split and the profits however they agree to in their operating agreement. For example, someone who's actively working in the business could get a bigger share than someone who just invested money, even if they own the same percentage. And corporation must distribute profit based on stock ownership. If you own 30% of the share, you get 30% of any dividends, no expectation and exception. Employee incentive plan. Corporation have a clear advantage with stock options. They can easily offer employee shares or stock option as a part of their pay, and many top employees expect this benefit, especially in tech company and the startup. LLC can't offer true stock option, and since they don't have stock, while they can create profit, and sharing plans are centric equity. These alternatives are often more complicated and less attractive to employees. Health insurance and the fringe benefit. Both LLC and corporation can offer similar health insurance and benefit, but corporation have a slight edge in tax treatment in a corporation. And health insurance premiums for owners who work in the business are fully tax deductible. LLC member owing more than 2% of the company must count health insurance as taxable income. Although they can deduct it on the tax return, both structure can offer typical workplace benefits like retirement plan, life insurance, and paid off time. Similarity between an LLC and corporation. Limited liability. Both LLC and corporation and protect their owner personal assets. If the business gets short or goes into debt, owner typically disclosing only what they have invested in the business. Their personal belonging, houses, and bank account remain safe from business related claims. State filing requirement. Both business structure must file information and documents with their state government and pay filing fees. And for corporation, this document is called for article for incorporation. For LLC, it's called article for organization and registered agent. LLC and corporation must have a registered agent or a person or company that accept legal documents for the business. The agent must have a physical address in the state where the business is registered and be available during business hour. Annual reporting. Both entities must submit annual reports to the state government. These reports update the state on basic business information like address changes and current owners, and most states charge a fee for filing these reports. Advantages of an LLC. Business owners may benefit from a range of advantages as an LLC, including the following: personal liability protection. Unlike a sole proprietorship or general partnership, an LLC protects the owner personal assets from lawsuit and creditor. The exception is if the business engaged in the fraudulent activities or if the owner signed a personal guarantee on their business financing. That's for the limited part of limited liability company applies multiple tax options. If you register as an LLC, you'll have a variety of an LLC tax benefit like certain deduction and the ability to avoid double taxation. An LLC can also elect to pay the taxes as a solo proprietorship, a partnership, as an S corp. One of those options may be the better than the other. It depends on how your business operates. Make sure to consult with a business tax expert if you are uncertain about which tax option is right for your LLC. Easy formation process. Forming a LLC is a simple process compared to other types of business entity like an S corp or C corp. The required paperwork is the minimal. It usually takes around 2 weeks. For the less the state of process your application and fees are typically less than $1,000. Advantages of a corporation. Forming as a corporation comes with advantages as well as including the following: some taxation flexibility. By default, a corporation is taxed as C Scorp. Profits are taxed at the corporate and tax rate. The investor are taxed on their dividends as well. Both income tax and self-employment tax is applied to these dividends. However, if it meets eligibility requirement, the corporation can elect to be taxed as an S corp to avoid the complex and corporate tax burden. Option to issue stock and attract investor. A corporation issue shares it is owner and can offer two types of stock: common and preferred. If the corporation is taxed as a C corp, it may issue both types of stock to attract different level of investor, while an S corporation must choose one. S corp may also cap the total number of shareholders at 100, and all must be citizen or permanent resident of the United States. Choosing between an LLC or the corporation, the choice between starting an LLC or starting a corporation is a deeply individual one. As you think through the decision, ask yourself what is more important to you, and is the formation process has greater potential to attract investor. Are you able to take on the operation complexity that comes with a corporation? How will you fund your company through your own capital investment or through selling ownership? Ultimately, your decision will come down to how you want to manage your business, pay taxes, and use external investment to grow. Can I convert my LLC to a corporation or vice versa? Yes, you can convert your LLC to a corporation or vice versa through a process called statutory conversion, which is available in most states. It typically requires filling specific. I hope you will enjoy this video. Like and subscribe my channel next time. Goodbye.